From the Real Estate Center at Texas A&M University, it's the Real Estate Red Zone. We are your weekly scouting report for residential, commercial, retail, and industrial markets and everything in between. Today is Wednesday, October 24th, 2012. I'm Brian Pope, Recon Editor here at the Real Estate Center.
And I'm Edie Craig, News Talk Texas and Market Report Coordinator. Today, Real Estate Center research economist Dr. Harold Hunt will join us to talk about how oil and gas drilling is affecting Texas employment levels. We'll also bring you the latest real estate news from Houston, DFW, Austin, Yoakum, Pearland, Ennis and Amarillo. But first, here's today's top story.
All right, the Texas economy continued to grow at a rate higher than the national average, and government job losses appear to be coming to an end. According to the center's latest monthly review of the Texas economy, the state gained 264,700 non-agricultural jobs from September 2011 to September 2012, an annual growth rate of 2.5% compared with 1.4% for the United States. The state's private sector added 265,100 jobs, an annual growth rate of 3%, compared with 1.7% for the nation's non-government sector. All Texas industries except the information industry had more jobs than a year ago. The mining and logging industry ranked first in job creation, followed by the construction industry, the leisure and hospitality industry, and professional and business services industry. All Texas metro areas except McAllen, Edinburgh Mission, Lubbock, Brownsville Harlingen, and College Station Bryan had more jobs as well. Odessa ranked first in job creation, followed by Houston, Sugar Land Baytown, Midland, and Austin Round Rock San Marcos. The review was written by research economist Dr. Ali Anari and chief economist Dr. Mark Dotzer. I have posted a link to the complete economic review on our podcast website. We'll have more news in a moment with today's Recon Recap and Small Towns Big Deals. First, though, a quick reminder. Halloween is a week from today, and we are still accepting your scariest real estate horror story submissions for that program. You can tell us about the most hilariously awful property that you've ever shown or had someone show you, or you can talk about the home repair project from hell, or you could take our request literally and describe perhaps a paranormal encounter during a showing. It could be anything. We've had people talk about exploding sheep, rattlesnake-infested properties, and truly awful tenants. All we ask is that your story in some way be connected to real estate and that no guilty parties, living or dead, be named. You can just email your stories to me at bpope@mays, that's M-A-Y-S, .tamu.edu. And now we'll go ahead and move into today's Recon Recap. A strong regional economy has secured spots for Austin, Dallas, Fort Worth, and Houston on a list of top real estate markets to watch. This is from the Houston Business Journal. The Urban Land Institute released its Emerging Trends in Real Estate 2013 report last week, ranking 51 U.S. markets for real estate investment, development, and home building. Texas tied California with 3 spots in the top 10, with Austin taking the 4th spot, followed by Houston at 5th, and Dallas-Fort Worth at 9th. We're going to stay in Dallas and Houston for a moment longer. The Dallas Morning News reported that Houston and Dallas were the strongest home building markets in the nation for the year ending in August, according to a new report by John Burns Real Estate Consulting. Houston had almost 27,000 single-family home building permits during that period. Dallas was second with 11,460 permits. Also cracking the list of top U.S. home building markets was Austin, which was at 6th with about 7,520 permits, Fort Worth, which was 13th with just over 5,070 permits, and San Antonio, which came in at 15th with nearly 4,890 permits. Construction will begin next month on a 384,900 square foot speculative industrial complex in Houston's Mason Creek Corporate Center. Completion of the 5-building complex is slated for third quarter 2013. Transwestern is the developer. Munson Kennedy Partnership is the architect. We're going to finish off in the Austin area with news from the Austin Business Journal. AMLI Residential is ready to add apartments to a rapidly growing master plan community. The firm announced it will build a 279-unit mid-rise apartment project on Simmond Avenue in Austin's Mueller Town Center. The property will include 4 or 5 stories of residential units as well as about 8,000 square feet of retail space. 15% of the units will be available through Mueller's Affordable Homes program. Groundbreaking is scheduled for first quarter 2013. Completion is expected in late 2014. And now for today's Small Towns, Big Deals.
Yoakum is in DeWitt County in the Crossroads area, and Brian, you're familiar with that area, aren't you?
It's near Victoria, yes, my old stopping grounds.
Yes. Well, Yoakum Black Gold is filling 36 rooms. Hotel construction is up throughout the Crossroads as the ongoing oil boom is limiting available lodging throughout the region. Yoakum's 38-unit Black Gold Inn is currently under construction at 702 U.S. Highway 77A. It should be completed in February 2013. Other hotel construction for the Crossroads area include Cuero, the 41-unit Hotel Texas, is nearing completion at 2400 Esplanade. In Victoria, Hilton Garden Inn and Homewood Suites are underway, as reported in September 2012. And also, Homewood Suites is the first hotel to obtain a 380 agreement from the Victoria City Council, meaning it must leave at least 3 room blocks open a month for the Convention and Visitors Bureau to sell. That's a great idea. So kudos to you, Victoria. You'll find this under Victoria. It's called Yoakum Black Gold in 36 rooms. We're heading to Pearland after leasing up the first phase of Shadow Creek Business Center. That's on Shadow Creek Parkway. ZT Group is planning to start a second phase building. That phase will be a 4-story, 80,000 square foot building, and phase 1 is fully leased. You'll find this under Houston. It's called Shadow Creek Pearland Part 2. And listen up, have you heard of the Spit and Whittle Club? That's where folks used to gather in front of a store and swap tales and visited. It's kind of like reality Facebook, but in the
So people
40s.
like sitting on their front porch doing this.
No, in front of store.
Like porches in front of stores.
Yes, I'm sorry, that's right. It's like a portrait. Well, in this case, the Spit and Whittle Club was in front of Brookshire Brothers in Angelina County 84 years ago. So we're going to fast forward to Ennis, which is south of Dallas on Interstate 45, because construction has started at the site of the new Ennis Brookshire's grocery store. The store will be 37,400 square feet and cost approximately $4 million. The store will also include a bakery, meat market, deli, and a fuel center, and the site also provides the new store with 12,000 square feet for future expansion. So Brookshire's could eventually be a nearly 50,000 square foot store. You'll find this under Dallas Fort Worth. Under retail, it's called New Brookshire's in store for Ennis. And heading up to Amarillo, Lindsay Manufacturing has broken ground on a new 50,000 square foot warehouse and distribution center in the Centerport Business Park near Highway 60 and Folsom Road. Amarillo Economic Development Corporation is contributing land and seed money as incentives to help Prana Development Group build the structure. Prana will spend about $2 million to build the new building. Lindsay makes agricultural irrigation sprinklers, and they will occupy almost half the building, and they will recruit companies to occupy the remaining space. This facility should be completed in March 2013. You'll find this under Amarillo. It's called Seed Money Grows Amarillo Irrigation Manufacturer. That's it, Brian.
All right. The oil and gas industry supports roughly 2 million direct and indirect jobs in Texas. Joining us today is real estate research economist Dr. Harold Hunt, who talks about this in this month's edition of Tierra Grande magazine. Well, Harold, welcome back to the Red Zone.
Good to be here.
Now, you've got this article in the latest edition of Tierra Grande where you talk about oil and gas drilling, and this is not your first time to cover this territory. You've done a lot of writing about the shale regions in the last year.
Yeah, this is the second article that I've done for the magazine, actually, and it sort of encompasses more than Eagle Ford. It takes in the Barnett and the Permian as well, just to give a bigger overview of what oil and gas is doing in Texas.
Well, in this time, you talk a lot about the effect that the drilling has had on employment. So let's go and start there. I think most people are aware that it has had a drastic effect on employment levels in the state. But in terms of numbers, what effect has oil and gas drilling had on employment here in the state?
Well, actually in the article there's a table that shows, but you've had some periods where on a percentage basis, you're talking 200% job growth. Now, granted, some of these counties are quite small, and 200% job growth isn't that many jobs, but, percentage-wise, if you look at the numbers, it's amazing how fast the employment growth has gone up and how much it's gone up.
Talk a little bit about how this has affected local real estate markets.
Well, that's interesting. The first time I went down there, it was really just sort of starting off, and I had one broker in Cotulla tell me that, about 2 years earlier, he could have sold me an acre of land for about $500, and when I was there, it had gone up to about $10,000. So, you've got some pretty good increases in land, but still $10,000 an acre. I mean, compare that to Houston or something. It's not a ridiculous number, but it definitely drove up the prices of land. And I know they would like more commercial development than they have. The problem is the employment thing. You've got all the people that can working in oil and gas, and so it's really hard to get people to take a job in retail or a restaurant or something like that because it just doesn't pay as well.
So there hasn't been, even though there's more people working down there hasn't been an increase in retail, restaurants, housing, things like that. Does this mean that there really hasn't been an increase in the amount of local tax revenue generated?
Oh, no, there's been some big increases in tax revenue and in retail and commercial in general. There's been some, but it's really limited by a couple of things. One is the employment. It's hard to find people. Another is borrowed money. I mean, most of the developers I talked to down there were saying that they do a lot of cash deals because the lenders are timid about loaning money down there. They just don't feel comfortable with the risk. There's this fear that, maybe we'll go into another oil bust, and so they're much more cautious.
You mentioned earlier, or you mentioned a moment ago, that you've had a chance to visit the drilling areas. Describe some of the changes that you've seen firsthand.
Oh, the big one is housing. I mean, there's a definite housing shortage down there, and I wrote about that in the first article where, there are people that have lived in these smaller counties for years, and their rent, hardly ever went up. And then when the oil field boom hit, then you had the problem of, much higher rents, and that really sort of put a cramp on local people who couldn't get an oil and gas job. So I'd say tight housing is the biggest change. A lot of RV parks, a lot of mobile home parks, a lot of hotels that are constantly full. So that was the big change that I saw, I think.
You recently spoke to a group in San Antonio, and you mentioned that you think drilling activity in the Eagle Ford Shale will continue for another 15 years or so. You told me earlier today that other people have mentioned that figure before, but that you actually sat down and did some research to kind of back it up. Can you talk a little bit about that?
Yeah, my job when I went down there was to sort of learn more about the industry so that I can let people assess the risk better of how long this is going to last. I mean, because it's such a big issue with the lenders and with the developers. Is it going to last 2 years, 3 years, 10 years, 40 years? So I really tried to focus on that and just sort of put some numbers together to say, okay, what do I think? And my guess is no better than anybody else's, but the Federal Reserve said they've already leased about 4.8 million acres in the Eagle Ford. So I said, okay, if there's 4.8 under lease, maybe they would actually produce 4 million of that. And so if you've got 4 million acres and you've got about 250 rigs, something like that, and they drain 200 acres per well, then when you work all the numbers, if 250 rigs drill about 5 rigs a year, then when you calculate all those numbers, it comes to about 1,250 wells per year. And actually, that's pretty, I think they're completing about 1,300 or 1,400. And so I say, okay, if you're doing 1,300 wells a year, and there's probably 20,000 wells to be drilled, then you're looking at 15 years.
Harold, as always, thank you for your expertise and thank you for joining us today.
Oh, good to be here.
Again, that was Real Estate Center research economist Dr. Harold Hunt. You can read his article, Crude Awakening, in this month's edition of Tierra Grande Magazine. I have posted a link to it on our podcast webpage. And that is it for this week's show. Be sure to link to our podcast page from your own website or blog. And while you're online, become our friend on Facebook and follow us on Twitter. We will keep you posted on the latest happenings here at the Real Estate Center.
Also, we do want to hear from you. If you have a comment or question about today's show, send us an email at texrec.tamu.edu.
From the Real Estate Center, where we've been helping Texans make better real estate decisions for more than 40 years, this is Brian Pope.
And this is Edie Craig. Thank you so much for joining us today in the Real Estate Red Zone. Bye everyone.